Is the bull market over? Was that it? Did we just see the end of the bull market? Let's start with the technicals here, right? On the right-hand side, S&P 500, SPX is what we're looking at. My response to this is I think we're going to see a bottom here pretty soon. I think we're going to see a bottom. There's a couple of reasons why. For one, looking at this daily chart. Okay, let's go to the SPX, the big index daily chart. We're still holding the uptrend. Okay, S&P is still holding the uptrend from the October lows. SPX, SPY is going to look a little different, but this is the major index, still holding the uptrend. Massive sell-off over the past month, right? But what else has it been? Seasonality. We know September has been the worst month for the market. September is the worst month. October is the bear market killer. So we're right on target. If you're thinking about seasonality, this is seasonality right here. All right. Now, the next part to this. Can we hold the trend is the question. We're at a very important level. There's a gap to be filled here. We did fill we filled this gap that was from July 26th, and we actually turned more bearish because we filled the gap and we moved lower. So there is the opportunity to fill the next gap at 4,298. We could go lower, right? But we're still within the uptrend. SPX. We are looking at SPX here. We're still within that uptrend. All right. If we look at the weekly moving averages, right? I want to take a look at the weekly moving averages. These are the last quarter. So this is like the 12, the 26, and the 40 weekly moving averages. Right here, we're still holding this level. We're still holding the big level, right? That kind of takes us back to the previous year. This was the previous resistance. We got above that. We held. We moved higher. We supported here. We're making new lows. Now, this is bearish in the short term. Don't get me wrong. This is bearish in the short term, but we are holding the 26 weekly moving average. This is the last 2 quarters of earnings. That's where we're finding support, right? So technically, we're still on track. We're still on track on the uptrend on a technical basis. We're looking at seasonality, obviously very weak, a lot of gap downs. And here's the biggest promising thing for the rally to continue. We're very oversold on the RSI. Okay, the RSI is very oversold, and we will get a bounce. Okay, I thought it was going to be today. I was wrong. We didn't get that bounce, but we're going to get that bounce, especially with September coming to the end. A lot of people selling seasonality, and also those macro risks. So let's take a look at the actual macro risks, right? We have the charts over here on YouTube if you want to jump over. Okay. And that first risk is, I think it leads with crude oil. Okay. I think it leads with crude oil. If crude oil breaks, right now we're at 93, right? We got up to 92.75. I'm sorry, we're at 90. We got up to 92.75. So if crude oil does break above, right? I'm sorry, if it holds, if it can hold below 90.92, this is the big resistance level for oil that we've seen back 92, right? 92 to 95. So this is the big resistance level now. This is the next level. We broke past this one. Okay, that put stress on the market, tightened financial conditions. Now we're looking at 92, 92.50-ish. If we hold below this level, okay, we didn't go any higher, and there's reasons for that. Yields can ease. So we can get bond yields start to ease, which they are breaking out. So that's not too likely unless these shorts on the yields start to cover. But if oil does ease a little bit, yields will ease. Okay, yields will ease. And the next factor here is you get the dollar start to ease, right? The dollar is also at a major resistance. So you're really getting the macro forces at a major resistance, oil at resistance, yields at yields broke out, dollar at resistance here. So if we get this turnaround, okay, it will correlate with the S&P bounce. Also, the market's going to be looking forward. This is if oil eases, right? If it keeps going higher, we'll go over that scenario also. But also we have PCE coming, right? The Fed's preferred inflation gauge. And I think the key here that people are not factoring in is PCE does not include oil prices. It will leak over to services, but it does not include oil prices, right? So that's what the Fed's looking at next. That's what we're going to be looking at. We have PCE and we have GDP. What does the Fed say? We want to see PCE lower, core PCE specifically, and we don't want GDP to beat the estimates, right? So for those of you who believe we're heading into recession, we're slowing down, that's what we're looking at here, okay? We also get the consumer report. What is the consumer doing? Is the savings rate still pulling off? Are they slowing in their spending? Where the income's at, right? So we're going to get that too. That's September 28th, 29th, next, I believe, Thursday and Friday. The market's going to be probably trying to factor in what are those readings going to be. If they're bad, if growth comes in stronger than expected, if PC is hotter than expected, the market's probably going to break down even further. Okay, but remember, PCE does not include oil prices, so that could be a positive reading, right? Are we being optimistic here? Yes, but we are looking at the macro forces hitting resistance, right? So the downside is some of that, how much of that oil, right? The oil prices rising is going to leak into transportation services. Will that feed into core consumption? Is that going to feed into core consumption, right? But that's not really a surprise for the market at this point. If oil doesn't ease, now here's what the bears are licking their chops on, right? If oil does not ease, if oil keeps moving higher, breaking out above that 92.50 level, getting up to 99.100. That's your next resistance, 99.100, right? That's what you're looking at. That's the downside. Okay, that's going to push bond yields a little higher. That's going to push the dollar. The dollar might break out, even though they're inversely correlated, which is why we have to stay and see what happens there. So if oil does spike, this will probably crush the economy. Okay, this will probably reaccelerate a recession if we see oil start to spike here for businesses and for consumers, right? And this is why I think Powell is looking past the oil move, because he said, what did he say? We look past volatile energy. We're focused on core, because either way, if oil breaks out, it's going to tighten the consumer and it's going to help them accomplish their goals of getting growth lower. Oh, but headline inflation goes up. Great. Headline goes up a little bit, but core comes down because now you really blunt the consumer. You really crush the consumer. All of you guys that have to pay prices, that's going to hurt you, right? And also manufacturing, right? It's going to slow down the economy if oil spikes. Typically, when oil spikes and the consumer is already weakening, that starts a recession. That is the risk there. So there's a playbook, right? Either way, it helps them get to core PCE lower. It helps them get there. Is there going to be a bump in the road? Yeah, 100%. PCE coming in hot. Remember this, PCE does not include oil prices. Okay, it does not include oil prices. So keep that in mind. I think you're forgetting a lot of the factors other than oil. Well, tell me what factors you're thinking of, and then we can address those. What factors are you thinking of, DD? What factors are you speaking of? Because in general, core PCE has been falling, right? High rates. Oh, we're talking about inflation. High rates don't make inflation go up. High debt doesn't matter. PMIs are actually starting to recover. The manufacturing PMIs are starting to recover. You saw today we got the global PMI turn up. Business activity in general is starting to turn up. The housing market is still frozen, right? Where are you going to get inflation? Shelter's coming down. So no, high debt. I mean, there's always high debt. That's irrelevant. It's high interest payments that count, which is the next point here. You're right. High rates, high interest is an issue, right, for the market to keep dipping. But here's the playbook from the Fed. Okay, the playbook from the Fed currently is keep a hawkish tone, right? Keep a hawkish tone. So let's get back to this. Keep a hawkish tone. That's the playbook for the Fed. Why? To warn the bond vigilantes. So what people need to understand right now is that there is a large, probably the largest in history, short positioning on US treasuries. Why? Because they know China is dumping treasuries. They know the US Fed is dumping treasuries. They're getting rid of their treasuries. That makes rates go higher. Who else is dumping treasuries? Japan is arguable whether they're going to keep dumping treasuries or not. Either way, China was the largest buyer of US treasuries and they're dumping them. That pushes rates higher. So traders come in, they short the treasury market to, not to get rates higher because they know rates are going to go higher because they have the Fed selling. So they're going to short also, right? So the hawkish tone is really, we're going to stay higher for longer. And it's a warning that something's going to break. Last time it was KRE, right? Last time it was the regional bank. It was SVB. That was a collapse. And if you get that, what happens? The bond vigilantes have to cover. So I think the Fed's playbook here is to keep their tone strong, right? To maintain a strong tone, to warn the bond vigilantes. If you keep shorting the market, you're going to cover because something's going to break. Okay. Number two, they want to keep the pressure high. They've already said this. They've said this a lot. They want to keep the pressure high because that's going to keep inflation low, which means they're not going to cut rates anytime soon. We already saw on the, on their last economic projections that they decided to decided to push the rate cuts out further. Okay, GDP is too strong, which is a good problem to have, but they're pushing them out further. So, number one, keeping the tone strong to warn the bond vigilantes. If you keep shorting the bond market, something's going to crash and we're going to pump liquidity back in and you're going to have to, you're going to have to cover, because the real issue is here. You don't want high rates. That's going to threaten the economy, right? So they're staying restrictive. Now here's where here's why the stocks are going to bounce next week, right? I don't want to say they will, but here's why I think there's a larger probability that they bounce. We still have shadow QE. Okay, we still have shadow QE. You still have the reverse repo facility, the shadow QE, Fed liquidity. It's not really Fed liquidity. It's tricky coming into the market. So you still have that liquidity coming in, and we can show you the charts. We could take a look at the charts. That liquidity is still coming in. I'm going to go over it, right? The Fed is still draining the balance sheet. So they're keeping rates high. They're warning the bond vigilantes, we're going to keep rates high. So you better cover your positions. And they're keeping things restrictive to keep inflation down, but they're still injecting shadow QE through the reverse repo. And they're still draining the balance sheet. And this is where it comes in. They drain the balance sheet until something breaks. So yes, they want something to break to some degree so the bond shorts can cover their positions. If they cover, they buy back bonds. They have to buy back treasuries. That is the cover. Rates come lower. What do they do to cover? What do they do if something breaks? Inject liquidity, SVB. That is the playbook. They come in, they inject. We'll see the Fed's balance sheet go up. Okay. And once they plug the holes, they go ahead and start draining the Fed's balance sheet again, okay, until the next issue comes. But while that happens, inflation trends lower. You get inflation lower, right? Now, where's the other liquidity? Why isn't the economy going to collapse, right? We're still in a rolling recession. We say this all, fiscal policy. Fiscal policy, you still have in the fourth quarter, everybody knows this is coming in, the Inflation Reduction Act, right? Support economic activity through tech and innovation to get productivity up, okay? Keep that up. Oh, what is shadow QE? Supporting liquidity where it's at. So I know it feels treacherous. The price action is treacherous. It looks ugly. S&P sold off. This is seasonal weakness. We've seen this, right? Of course, we all know this. But the key is bond volatility. Where is it? It's going lower. Bond volatility is lower, and that is the collateral multiplier, meaning if bond volatility goes up, then it reduces your ability to produce liquidity into the market. We're seeing global liquidity actually fall to new lows. This is not good. But if bond volatility keeps falling, then basically you can multiply the collateral that you lend out, right? And you still get the RRP pulling back. That's the macro. That's keeping liquidity up. And then you get fiscal policy coming in, which you guys cannot skip. And I don't know why people are skipping it. You get the Inflation Reduction Act liquidity, right? You're getting government spending back in. But the price action is scary. Yes, it sure is, because it's seasonality, because people want to short, right? So you're getting economic activity pick up. We see it in the price action, right? Now let's take a look really quick what we're seeing here, because this is probably where I think you get a transition. Okay, 2-year bonds broke out of the level. Okay, but what happens if something breaks? Take a look over here. If something breaks, we're gonna see what we saw last time. Something broke. SVB, yields collapse. What does that do? That creates more liquidity for the market, because now your collateral is no longer at risk because rates are down. Okay, so if something breaks, boom, rates come lower. Okay, same thing on the 5-year, same on the 10-year. They're all falling, but the housing market is frozen, so you're not going to get inflation here. You're not going to get inflation. If anything, growth continues. Economic activity continues to decelerate, which allows inflation to decelerate, which allows the Fed to keep pumping liquidity however they want, because there's no risk of inflation here, right? China still pumping liquidity. China is stimulating their markets. They're not going to fall apart. Okay. Bonds selling off hard. The bond trade just never worked, right? The dollar at resistance. So if you look at the technical signals, the dollar is at risk of rolling over. Okay. Maybe it does break out, obviously, but if it rolls over, that's the bottom. That is pretty much the bottom there. Oil taking a rest. Okay, we see oil's taking a rest here. Let me take the volume off. Oil's taking a rest here. Okay, and we're gonna look at the technicals on the S&P too. So oil's taking a rest here, but here's the scary part, right? Here's the scary part. VIX shooting up, right? Is it above level 2 risk? No, it's at it's at level 1 risk. It's still below 20, but above 15 tells us there's some worries in the market. Above 20 is something's wrong. Above 20, we're not there yet. We're not above 20 yet. Okay, vol for Nasdaq, same thing. Move index, nothing, right? This is why I am not worried. Bond volatility is going nowhere, and the reason that is shadow QE, reverse repo liquidity actually went up today. It actually went up today. So if something breaks over the weekend, expect Janet Yellen, expect the FDIC to jump in, expect the Fed to stir up another ABC, BTF, PT, some type of program to support liquidity. That's more than likely what's going to happen. I'll answer your questions. How do you justify an entire year bull run? We have been running since January. How do you support? How do you justify an entire year of bull market run? I mean, how do I support that? Really quick, inflation's coming down. Oh, but CPI is headline CPI is going up. Okay, well, true, but core inflation is still falling. That's what the Fed's focused on. That's what causes them to pause. So the Fed is on pause right now. Okay, the Fed is on pause. Also, when you're up on the year, seasonally, I'll tell you everything. When you're up on the year seasonally, actually, hold on. Let me change the YouTube. Let's get the chart up so we know what we're talking about here. Let me get the S&P chart up. Okay. So I can look at this. Okay. So here we are. We're on the trend. Now, Nasdaq broke the uptrend, by the way. Nasdaq broke. Oh, that doesn't look good. Let's go this way. Okay, Nasdaq did break the downtrend, but Nasdaq is very volatile and it actually was stronger, okay? Because it went up a lot. But you can see we're still in the bull market trend from the October lows of last year. So we're up there. Why? Why are we still up here? Number one, inflation peaked in June of last year. Okay, inflation is not reaccelerating. Just because oil jumped to 90 does not mean inflation is reaccelerating. Core is still falling. That's the structural inflation. Okay, the Fed is not chasing. The reason in the 1970s that inflation went back up was because the Fed was chasing inflation. What did they do? They cut rates as soon as inflation rolled over, which would have been last June. Imagine if the Fed was cutting rates today. If they had been cutting rates the whole way down, well, you're going to reaccelerate inflation. They didn't know that in the 1970s, but today they know that. So they're not cutting rates. They're not chasing. They're holding high, right? They're holding higher. So inflation is not the concern. Oil is volatile. It's going to go up and down. And guess what? It's not driven by crazy demand. Oil is not being driven by demand. China is slow right now. US is probably going to slow down. Okay, so it's not driven by demand. It's driven by literally the OPEC cutting production. Okay, it just takes OPEC. It just takes the US to do one deal, the US Treasury to do one deal with OPEC to get them to increase production. At the same time, you have 5 other countries increasing supply. By the way, this last month, there was more supply, okay, from OPEC. There was more supply than there was there's more supply than there was demand, because you have 5 other countries still pumping, and the US at pre-pandemic highs for pumping oil, right? Increasing the supply of oil. So structurally, oil is not going to break out unless the traders keep trading it up. But also there's the positioning on oil is getting very bullish. When people get super bullish, that's probably time to ease off. I'm not saying oil is going to flatten out here. It could go to 100, right? Could go to 100, but I think it's going to run out of juice because the US economy, the global economy has not recovered yet. It's in the recovery phase, but we have not fully recovered yet. So the demand is not there while supply is still coming online. Okay, the demand is not there to keep these oil prices up. It's just not there. Okay. Next, the Fed is on pause. So the market knows, okay, that's it. Your rates are done. Maybe they hike. I doubt it because things are starting to decelerate. Okay. If something does break, like we said, we go into recession, well, the Fed's balance sheet comes up. Number 3, reverse repo liquidity has been coming into the market. What is that? That is a facility at the Fed, okay, that got up to $2.5 trillion. I keep saying this. I just want you guys to know this because you're going to hear it eventually next year. Oh, well, it was the reverse repo that kept the markets running. Okay, reverse repo liquidity comes in. It's eating up all these treasuries, even though rates are still going up. it's eating up the treasuries that the US Treasury is creating. Now, the US Treasury is creating those treasuries and supplying them on the market, making rates go higher, but that gives them spending power. And we're heading into an election year. What do you think is going to happen? As soon as the economy slows, here comes more fiscal policy. Here comes the White House. Let's take that off. Let's do this. Let's inject here. Plus, you got the Inflation Reduction Act, the CHIPS Act. So you have government spending still coming in, right? We're still on the bull trend. We haven't broken that yet. So that's my justification. Okay. Student loan repayments, not a big deal. You can push that out further, right? To the next year. They don't have to pay interest accrues. They don't have to pay credit card credit card debt, all-time highs. Doesn't matter. People still have jobs. If you lose jobs, that's where you're in trouble. But again, the fiscal policy, the fiscal spending is doing what? It's creating manufacturing jobs. It's onshoring jobs in the US. I'm here in Phoenix, and they created a TSM manufacturing semiconductor plant. Jobs everywhere. There's enough jobs. Okay. Oh, well, houses are not being built that fast. Yes, they are. Multifamily apartments are getting built at a high rate. You still have construction spending up. You still have building permits going higher, but for multifamily, right? That's where the prices are coming down. So you have that, right? Also, S&P estimates going higher. They bottomed out. So the S&P earnings last quarter went the most negative. They were negative. Now we're leaving the earnings recession on the S&P 500. Okay, there's a lot of companies that have trash earnings. They're not gonna make it. But the S&P is the top 500 out of 4,000, 5,000 stocks. Those earnings are still positive. That's what pulled most of the earnings in the market is S&P, right? Apple, Amazon, they're still coming out with new software. They're still pumping AI, right? And they push most of the earnings in the S&P. So this is a pullback that will be bought. There's a lot of cash on the sideline. And we'll see, right? Oh, it's making new low. Well, we're still in the uptrend. Okay, we're still I believe we're going to get capitulation. We're oversold. We'll see what happens there. So that's some of it. I mean, there's more backdrop. Also, who's it that asked that? Economic activity is bottoming out. Okay, this is the economic cycle. This is the business cycle, which are the surveys for manufacturing, employment, new orders. That leads the economy. GDP is going to slow, but the forward-looking GDP, because GDP is 3 months ago, right? When we get the numbers, those are numbers from the last quarter. Those are from the last 3 months. But economic activity, the ISM PMIs, those are real-time GDP, right? Those are the orders coming in today. That's the employment they need for tomorrow. That shows a recovery in the manufacturing sector. We just got more data today. The services PMI for the ISM has already been turning up. We're still in positive territory. Around the globe, globally, services have been leading. There is no recession in services around the globe. It was all in manufacturing. Now we're starting to get that recovery, right? Led by the Chinese credit impulse. They're pushing credit through this. Their credit is going higher. So I hope that answers your question. Market was way down last year, so some of that is just rebounding. Well, we broke the bear market trend. So technically, if you're down more than 20%, that's a bear market. We're not down more than 20%. We're down like 8% today. I think now we're down, what, 11%? So we need to get back down to like 3,900 for it to be a bear market in the SPX. We'd have to get down to that, okay? So showing the charts here, this is the bull market trend. We're still on trend. The big levels for 431, which we violated today. We got to 430, so that was nasty. But we are also, we're oversold. So this makes sense. If we were up here in the RSI and touching that level, I'd be a little worried because there's more selling pressure. That selling pressure is running out of juice. From the banking crisis, we're still holding anchored VWAP. So as far as volume, if you average by volume, we're still in an uptrend here. Okay, we should still go higher. Okay, so you need a black swan event, but again, what was the last black swan? It was SVB, and the Fed stepped in, and that's when the market rocketed higher. So I wouldn't even doubt if something broke this weekend because of the expectations, because they're holding rates higher, and they didn't increase rates, but they're telegraphing we're going to keep increasing rates, right? We know commercial real estate is at the biggest risk. We know the housing market has a lot of risk. So if that becomes the main case, something breaks, well, they're going to cover the patches. And if they're smart, they're going to wait till the weekend and then do it so the market can't react in near time. Why? Because the market is the collateral to the system. The Fed is not trying to crash the collateral system. They'd be all out of jobs, right? The White House would be out of job. They're not going to let the system fail. This is not 2001. There's no surprises yet. This is not 2008. We have QE today. We can pump. You got literally shadow QE. So this is not the same deal, right? Information travels really quick. I agree with you. I agree. We will go back up, but just like anything running, everything must breathe. We've been breathing, bro. We've been Jody Tobin. Wait, Jody. Jody, is that you? Okay, Jody. We've been breathing. I mean, S&P, right? SPY is down 6.5%. Okay, from the highs. SPX, here's SPX. We're still in the uptrend, right? We're still in the uptrend. We're still every time we tested the trend, there's a bounce. SPX is down 6.5%. NDX is probably down a little more. Nasdaq, Magnificent Seven, down 8%. So this is the breath, right? And that trend is breaking. I do see it. It did break my my momentum trend. So Nasdaq is oversold, but I think Nasdaq will recover faster. It is sensitive to high rates, but the Magnificent Seven will probably, because look, if we turn over really quick, okay, we'll get back to your questions. If you turn over to the Mag 7, okay, IWN getting crushed, Dow looks like crap, Apple, nothing. Apple, nothing. Okay, Apple didn't even move today. Apple was green. Are you paying attention? Apple was green because these guys can still move higher in a slow growth economy with 5% rates, 5.5% rates. This is Fed funds rate, right? The yields, 30-year yields, they can still grow their earnings. They are the monopoly. Apple still up. Amazon, okay, Amazon was red today. Google barely moved. Meta moved up today. It gapped up and then it was red, but it gapped up. Microsoft, right back to where it was, not leaking any lower. Netflix probably got crushed. Yeah, Netflix user growth is down. I wouldn't even say Netflix is the Mag 7. Tesla got crushed. Tesla got crushed today, by the way, because Wall Street is expecting a certain amount of deliveries, and they had to. I had it down over here. So the price action. Blah, 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 let's get to it. Weaker deliveries, weaker production. So they had to do some factory upgrades. Therefore, they weren't able to produce as many deliveries. That's where they're down. But that was already priced in. They talked about it in the last earnings call, right? So Wall Street's expecting 462K. If they do beat that, it's going to jump. If they meet expectations, we'll see what happens, right? But they're expected to not meet that. Big support at what is this? 242, 241 is my big support for Tesla. They got to hold this trend, right? So Tesla did take it in the head today. Nvidia, nothing. Nvidia green today. AMD got crushed, I believe, last couple days. So again, big tech isn't really responding that negative to this crazy sell-off. And there's a reason for that. Probably no real way to time the market though. Well, not perfectly. You can't perfectly time the market, but you can put as many variables together and give yourself a probability. You don't know, but you're going to give yourself a better probability outside of any black swan events, as always, right? Right now, the macro forces, the dollar, yields, oil, they're tightening for the Fed. So what that kind of does is it tightens financial conditions. Therefore, the Fed really has no reason to stay so damn tight, but they're still doing it because they want you to think something is going to break. They don't want it to break. They're going to cover it up, but they want you to believe something breaks so that these damn bond vigilantes is what they call them. The people shorting the bonds, Bill Ackman, billionaire, they're shorting bonds. And also growth is higher than expected. So yields typically rise when growth is high, right? That's not a bad issue to have. So the shorting bonds, and that does stress out liquidity for the market. So if they can get them to say, hey, look, stop shorting, something's going to break, they're going to capitulate. They're going to cover like they did in March. Okay, and then you get a big slide, things start to ease again. So I think that's kind of the game plan right here. Right now, what we're seeing. I got Apple testing 170 next week. Today was their last push with the 15. Maybe you're right. I'm just saying it didn't slide significantly today. Apple didn't really collapse. Where's Apple at? Right? Yeah, you got your trend. You got your support at 175. What did you just say? 170? Okay, you said 170. It could break down to 170. I see the bear flag. I know what you're looking at. All I'm saying is today's price action, Apple did not collapse. That's all I'm saying. Over the next couple of days, some things can change. If the overall market keeps leaking lower, we go fill the gap lower. Yeah, Apple will sell off. But today it did not. Look at the green. I printed puts all day today from Apple. Oh, you shorted Apple when it got up to like what, 177? You probably shorted it there. Cool, great. But I'm talking about the macro, not necessarily a day trade. Okay, I'm not necessarily talking about a day trade here. Yeah, if you're a day trader, you don't care, right? You don't really care. You just want the signal. You can go long, you can go short at any moment if you're a day trader. So that's not really kind of what we're looking at here. We're not talking about day trading. Perfect. We seeing the same thing. Yeah, I see the bear flag. I see the bear flag. And what I would say is that bear flag will play out if the overall market rolls over, which is why I am always as a trader. You know this as a trader. You should be looking at the overall market. If it's in your favor, then more than likely it does follow through. Okay, but the S&P, if the S&P does bounce, right now, SPY looks way worse than SPX. That's why I didn't look at SPY because it makes me look bad. No, I'm just playing. But that's why I didn't look at SPY. But if we do track SPY, it's still on the uptrend. It dropped. So let me yeah, we could just drop here. It did drop the 431 level. That was my level. I was like, oh, we got a hold 430. We dropped it. Now we're looking at 425 to 427, but we're still in the uptrend and we are over hey, why isn't the RSI coming on? Oh, it's because I don't have it on that one. But we are oversold. So if we do, we're headed into the weekend, it's Fear Friday. If we get a bounce, Apple's not going to roll over, bro. Apple's not going to roll over if we get a bounce. That's what I'm saying. Yes, I'm a day trader. Okay, you're right. SPY sus. SPY looks sus, which is why I'm looking at futures also, right? You can look at futures, not just SPY. Look at futures also. So if we look at futures, let me go to the futures really quick. Because listen, the charts look treacherous. They do look ugly. They do look pretty ugly here. Also, you had the stocks 50-day moving average. It looks like capitulation to me. There's a lot of that was a very fast downside move. A lot of weakness priced in really, really quick. The market, I think, is literally pricing in. I think the market is just pricing in what the Fed took off the table. They took off cuts in 2024, pretty much. So the market is pricing that in. As a matter of fact, let's go to let's go to futures. What the hell did futures do? I haven't even looked at them today. See, what do futures do? Future rate hikes. That's what I'm looking for. Future Fed watch, future rate hikes. What did they do? Is the market pricing something else in? I think there was a 75% chance of a hike. 75% chance of a hike in November. Still the same. Nothing changed there. Yo, what the? Okay, let me show this on YouTube. Get that data in. All right, so yeah, we're still break even there. So 74.5% chance of a hike. Did that change versus the last month? Not really. We're pretty much in the same area, okay? Or a pause, 75% chance of a pause here, okay? You go out to December, there's a chance of a pause, 59% chance of a pause, nothing changed there. Let's just go ahead and jump to July. I think that's when the first cut is supposed to be. 38% chance of a cut in July. June? Oh, okay. The chances of a cut in June actually went up. Okay, so the market is pricing in cuts. By the way, Morgan Stanley is not changing. They believe the Fed does cut January. Morgan Stanley is not changing their position. So the market's pricing in a cut in June. Very interesting. So that did flip. So maybe bad news is bad news now. Good news is good news. Bad news is bad news, because it's saying, okay, we're pricing in a cut in June because we think the Fed is getting too tight here, right? Which means if growth does come in better, we get the ISM. If it comes in stronger than expected, the market probably won't freak out. The Fed's not going to raise rates because the ISM manufacturing is better. They're going to raise rates if core inflation goes up. They're going to raise rates if oil jumps over 100. It won't do anything. It will factor into core a little bit, but they're not going to raise rates of that, because they're going to raise rates if unemployment maybe drops further, which I doubt it. We're getting a lot of layoffs. We see that, and those will continue. So I think the Fed is done here, right? I think the Fed is done here. The market is just pricing in those cuts that they're pricing out the cuts. We had to push the cuts out further, pricing that in. That's sort of what we're looking at here. So no big change there, right? Now on to the big announcement. Tesla, obviously, whatever. So in crypto, what's going on in crypto? What's going on in crypto? Okay, out of all these, out of all the weakness in the S&P. By the way, we weren't all weak. Look at care. Oh, I forgot about this. Check this out, man. You guys got to check this out. This is why I'm like, hey, I'm thinking over the next couple weeks. This might be why the market is pricing in cuts. Regional banks are in trouble right now. Okay, commercial real estate is in trouble. Regional banks are in trouble. KRE, the regional bank ETF, is rolling over. If you want to see the charts, jump over to YouTube. Okay, it is rolling over. It's very weak. Last time we saw this, the Fed stepped in. So you can see, obviously, this was the weakness. Now we're seeing it again, right? Got up to 49. KRE from the previous high is now down 16%. I mean, I think the Fed's going to step in at some point with the Fed balance sheet, not because KRE is down, but because KRE being down, stocks are forward looking, is a signal that something is stirring up in the commercial real estate market, or something stirring up in the regional banks. There's still people walking away from regional banks, right? Because it's like, oh, you're going to pay me nothing. They're walking away. They're losing deposits. Rates are higher. And the way this works is if people take their money out of your bank, they move it to a money market fund, Schwab, BlackRock, whoever it is, State Street. They're going to get 5% there. You lost your deposit. Your deposit is the way that you make money, because with that deposit, you lend out 10 times the deposits for interest. But if you don't have it, all of a sudden you can't lend out. You can't make money. Number two, if you already lent out their money and all of a sudden they go ahead and take their deposit out, now you're underwater because now you're lending with no collateral. So what do you have to do? You have to sell your treasuries. So what happens to treasuries? Treasury market goes lower. If treasuries go lower, rates go higher. So it's a big domino effect. This is what happened in March. I feel it coming, right? I know this, and I'm just playing. I feel it coming though. It looks like this is where we're headed. We're headed for something. Something's probably going to break. Especially the Fed really is trying to get these bonds, vigilantes, these guys shorting bonds and treasuries to really capitulate here. So KRE, big red flag. I wouldn't even doubt if this weekend we see something happen. That's might be what the market is sniffing out as we sell off so aggressively. Okay, other than being seasonal weakness. So check out KRE. Now, XLE, right? Energy pulling back hard. I mean, energy just pulled back pretty hard. Is that a forward-looking indicator to oil? Yes, because guess what? The demand cannot match. Okay, cannot keep this oil price higher. It has to be traders. It has to be sentiment. It has to be a catalyst. So far, OPEC's been cutting production, making oil scarcer in the market, pushing up the price. So maybe they'll come out and they'll keep cutting production, but they're also giving market share over to Nigeria. Man, I got to memorize these. There's like 5 countries they're giving market share to. So 2 of them are in OPEC also. So they can't keep it up, right? Demand is falling, or OPEC is forcing the Fed to cut rates. They're trying to get a global slowdown by pumping oil or gas prices so that OPEC can so the Fed can say, okay, this is enough. We just got to crash things, right? Because that would lower rates for them too. Everybody suffers around the world. Why specifically? Because the higher the rates, the stronger the US dollar, right? If you're in another country, you could literally just park your dollars at the reverse repo or money market funds and receive 5% interest. What? Hasn't happened for what, 60, 50 years? So the dollar gets stronger the higher the rates. The stronger dollar crushes other currencies. The stronger the dollar hurts the buying power of other countries. It increases our buying power. So they may say, damn, we got to orchestrate oil to go higher so it can crush the US economy, because it's going to slow down consumers, so that they can cut rates so that the dollar can slow down. So the dollar stops crushing us, right? The dollar is eating them up. It's called the dollar milkshake theory, right? They all owe debts in dollars. So think about it. Every country on earth, right? There's $80 trillion that are outside the US, and they're all indebted, right? This is all debt, by the way. They owe dollar debts. So if the dollar goes higher, your debt goes higher. If your debt goes higher, your payments go higher. Your servicing payments go higher. That takes away from your GDP. It takes away from earnings. They're getting crushed. So the only way to stop the pain is to force the Fed to cut rates. That could be what's going on here. Right? So we're going to get some type of flash crash. Maybe it was today. Maybe not. SVB, was there a big crash in the market? No, SVB happened over the weekend. markets go higher. Why? Because Fed liquidity stepped up. Because the Fed, Janet Yellen, FDIC stepped in and said, we will not let deposits collapse. We're going to step in at all. For any reason, we're going to step in above 250%. Not 250%, 200K. So they're not going to let the market collapse here. Janet Yellen and the US Treasury even talked about last year buying back their own bonds. So they could be issuing a bunch of debt, new debt, to do what? To take that cash that they got, the debt, and to go buy back old treasuries, to go buy back the old supply to cap rates. Now rates are breaking out, so it's very treacherous right now. Hey, they're breaking out, but I wouldn't doubt that they step in and do something about that, right? So oil pulling back, solar getting smashed, absolutely smashed. It's going to be on sale pretty soon. XLK down, SMH down, like everything's rolling over. But the key is what didn't roll over today. Home builders rolling over, consumer discretionary rolling over. It was XLP, consumer staples rolling over, retail rolling over. Everything's rolling over except for utilities. So you do have inflows into utilities, which is a defensive play. So investors, some fund managers are going into that, utilities and big tech probably. That's it. Utilities. That's it. Yeah. They only went into utilities. Okay. Now we pretty much got through the market. That's what's going on there. Next, crypto. From all this stuff going on, and if you want to see this, if you're on TikTok, you want to jump over to the YouTube so you can see this chart. Bitcoin flat, okay. Ethereum flat today, kind of green. Total crypto market, kind of green. Ethereum, whatever, right? And this is what I'm gonna give you guys time to jump over there to the YouTube stream. Link in the description. You want to see this chart? You want to see what I'm presenting here? I'm giving you time. Chainlink up. Chainlink up. Okay, why is Chainlink up today? Why is the equity market rolling over? Why has crypto been so weak? And why is Chainlink up 5%? Oh, that's not much. Well, Chainlink's actually up from the beginning of September, 20%. Why? Because they are being supported by the SWIFT network, the global messaging system, right? They're being supported by the World Economic Forum. We're going to go over this tomorrow, but tokenization is here. The future is here. Now, if I go to link to the real key here for the technicals is, and we're getting close here, is Chainlink is not only moving higher, which is a CCIP protocol to accelerate banking, but it's breaking the ETH link to ETH chart. So this is Chainlink versus Ethereum. It's going to break out. It's getting very close to breakout. What does this mean? That it is now appreciating faster than Ethereum. Okay, let's look over to Bitcoin. Also, at its cup and handle, it's also at risk of not at risk, but it's almost breaking out too. Once Chainlink starts to break above, starts to move faster than Ethereum and Bitcoin, plus you get tokenization, which we're going to talk about tomorrow. Make sure you jump into the, make sure you jump in. I'm going to do it tomorrow at 12, 2 p.m. Eastern time. 2 p.m. Eastern time is when we're going to talk about this. I think this is the number one opportunity, and I'm not talking about over the next 12 months. It probably is too, but I'm talking about the number one crypto blockchain in the universe right now. Okay. And I'm very sure of this because of what's going on. Okay. This is and I'm not trying to sell you no gas. Just jump on tomorrow, listen to it, or you can re-listen to it later. This is the best opportunity I've ever seen since I've been in the market. Before, it was Tesla. That played out. Tesla's 800 billion. Next, it was Bitcoin. Okay. Bitcoin 10x. Ethereum, great opportunity. But now you have the traditional financial system needing a technology, not betting on a coin, needing a technology, wanting a technology, literally writing white papers on why this technology is the future, why it's going to 80x growth into the future, why it's going to cover 867 trillion asset classes. I'm sorry, $867 trillion of assets are going to have to flow through this technology. Okay, that is why I'm so bullish on Chainlink right now. I'll give you the details tomorrow, but the technicals are presenting that fact. The technicals are setting this up. Okay, the technicals are setting up right now. it continues to surge because Swift and the World Economic Forum are supporting this technology. They've been doing it for years, as a matter of fact. CBDCs are going to have to go through Chainlink, CCIP tool. It's a protocol, right? It's going to have to go through that. It's the most innovative global financial technology in modern day finance. Oh my God, this guy's crazy. Okay. Just wait. Just wait. I'm giving you now. I'm trying to tell you now. I'm trying to give you the juice today, right? I don't make money off this. What am I don't make nothing off you. What are you going to pump my bags with your $1,000? With your $300, you're going to pump my bags? Hell no, you ain't going to do nothing. I'm trying to let you know this is the best opportunity I've ever seen. And we're at the end of a bear market, right? Oh, we're starting the bear market. No, we're at the end. Economic activity is turning up. Inflation's coming down. Yes, we have some treachery over the next couple months because it's seasonality. The damn fiscal policy, the government is printing money like madmen. They're going to keep doing it, especially next year. If student loans really do hurt the consumer, expect Biden to come out and say, we're going to give you guys payments, right? Is that inflationary? It probably is. It probably is a little inflationary. So how are you going to hedge yourself? Number two, a technology growing this quick does not care about 5.5% inflation. When something's growing at 100% a year, 5% means nothing. Okay, 5% means nothing. It's a $3.5 billion market cap. It's probably going to be $4 billion by the morning. It's been moving up. Check out the price, ally link. Okay, this is the best opportunity I've seen, and I want to explain it tomorrow. So check it out on the YouTube channel. We're going to go over it in depth. I'm going to have my brother, and he's a software engineer, to break down all your questions. If you have questions about how it works, how it makes money, what is the business model, ask those questions. We're going to be on there live tomorrow at 2 p.m. Eastern time. What platform do you use to get Chainlink? I have Coinbase. Do you think Tesla's going to go up Monday morning? Tesla might have some headwinds, George, because production, and it's stupid, it's dumb, but it's just the reality right now, right? The Wall Street's expecting deliveries to be 462K, and they did warn, say, hey, we might be under that because we're going to allocate our resources towards adding upgrades to the factories, right? For Cybertruck. This is all for Cybertruck, but you still have Cybertruck coming online, probably October. So there's no, like, I don't know that I can't guess if Tesla's going to go up. I think it's oversold. I think it's oversold. 250 is the level. I actually got in today at 254, and then I streamed this morning and I wasn't paying attention and it broke down and I was like, damn it. But I'm pretty convinced Tesla's going higher, especially if the overall market bounces. If it leaks lower while I'm in trouble, I'll just sell calls against my position, which is why I don't tell people what I'm doing, because it doesn't make any sense, because it's not an investment. I'm trading Tesla. Okay. I'm trading Tesla because I know how to trade Tesla. When it comes to this opportunity, Chainlink, this is a grab and hold. This thing is a 3.7. It's probably going to be 4 billion by the morning. Okay. I think it goes to 30 billion market cap. I think it 10x is really quick, especially with this narrative tokenization. Everybody's doing it, and they're the number one blockchain tokenization for this. Wow. And then you're looking next 5 to 10 years, you're looking at something that could rival a couple other networks that are worth 100 billion. If you want to get real savvy with it, and it, I mean, the opportunity is insane. Okay, this is one of the most insane opportunities I've ever seen, and I just want to share that. Maybe it doesn't work, but I still think there's a 90%. My conviction is going up higher from the evidence that I'm starting to see come out. This is bigger. I don't want to say it's bigger than AI, but it is a faster growth rate than AI. It implements very quick. This is the global financial system. This is Wall Street. This is World Street. This is the World Economic Forum telling you their next move, telling you what they're going to do, telling you what they're going to invest in, what technology they need to actually pay off the debt, to increase productivity, to increase global trade, increase efficiencies, right? So I'm pretty pumped up about it. We'll see what happens there. Do you think Tesla's going to go up? Oh yeah, I already read that. AI dream is wearing off. Not really, not for the overall market. It might be wearing, I mean, maybe for the overall market, but it's not wearing off for the companies that have AI that are implementing it. It's probably wearing off for the overall market. If that's what you're speaking of today, yes. But I mean, AI is AI isn't necessarily mean the market just goes straight up. Dimiyush Labu. Labu is biotech, right? 3x bull s. Oh no, wait, what is this? Oh, it is biotech. Yeah, you're bullish on Labu. I feel like this will get crushed because it is because it's a risk. right? It really depends on low rates. Labu, it's 3x bull biotechnology. I wouldn't be invested in that. That thing is breaking down hard. Maybe you're shorting it. Do you think there will be an overall downturn in the next 2 years? No. No, hell no. Hell no. I don't think so. I don't see it because what people are missing here is the fact that rates are so high. That is the cushion if things do downturn. If things do flip negative, well, rates are so high right now that you're going to get the Fed can cut rates at any time. They can recover the market, right? They can recover the economy. They can cut rates, or they could just flip their balance sheet and start pumping liquidity. So no. Number two, government spending. They're still spending. So I just don't see a downturn unless there's a black swan event, right? If China invades Taiwan, that's going to be not structurally, that's going to be economic fear. But the dollar goes higher and that'll crush Japan, that'll crush China. They won't do it. So unless there is a black swan, I don't see really much uncertainty. I mean, I don't see an economic downturn. Alma Shido. What are you, Japanese? Alma Shido? Can't tell, man. And your picture is too small. So yeah, I don't see it. S&P still in that uptrend, looking solid here. S&P still holding the 2 quarters. That last pivot is 4,300, 42.7. S&P earnings also got revised up. If they get revised down, then S&P is going to struggle a little bit. Oh, we got some new data here. Industry analysts predict S&P SPX will see a 19% price increase in the next 12 months. Wow. Let me show this on the YouTube. Let me get this chart on the YouTube. So earning projections, the earnings picture is just getting better. Maybe not for long, but the economy is definitely not here it is. The economy is not the stock market. It's looking 12 months out. Industry analysts, and maybe I haven't really digested this yet. Industry analysts predict SPX will see 19% increase in the next 12 months. S&P bottom up target price for closing September 2022 to 2023. So you could see here, S bottom up target price for S&P earnings is going higher while price is falling. Seasonality. We're gonna get a bounce here. I'm very how do I say this? Confident we're gonna get a bounce in the S&P. Earnings are going up. DMU, CNBC got data. Real estate prices up despite mortgage rates. CNBC, really? I mean, I know they're powerful, but are they that powerful? CNBC got data, real estate prices up despite mortgage rates. I'm kind of confused about what you mean by that. I mean, it depends what region you're at, right? If you're in Miami, prices are going up. If you're in Phoenix, prices are going down. So it depends on the region you're at. Whether and shout out to Josh. I talked to Josh. He's a real estate mortgage guy, professional. We talked about that earlier. So it really just depends, where you're looking. I appreciate the lives, Alma, Shido. Appreciate the support. Appreciate the support. I have a free newsletter also. But tomorrow we're going to be talking about the best opportunity I see in the market for the bulls for a long term, for crypto, best asset class, most explosive asset class. And the reason why, the total addressable market, this is the biggest total addressable market. I'm not saying Chainlink will swallow the whole market, but it's the biggest total addressable market, and it's supposed to 80x from here. Okay. And the thing that people don't know is that the whole global financial system, China, Japan, they're all registering for CBDCs. They're all registering for central bank digital currencies. It's going to happen regardless of what you hear on the news. It's going to happen. Why? Fed now, because it's faster, cheaper. It's faster, cheaper, more efficient. It increases GDP. It cuts costs. Tokenization. BlackRock's doing it. Everybody's doing it. There's a list of countries who are already registering. Some people are using XRP. They're probably going to fail because XRP cannot cross chains, private to public. CCIP on Chainlink does. You can go private chain to public chain. You can cross private chain to private chain. XRP cannot do that. So central banks will be tokenizing or putting their whole financial system on the blockchain. and they're going to have their own private blockchains. That's fine. You won't be able to see what they're doing, but they still want to communicate with each other. And what allows them to do that is CCIP, is cross-chain interoperability via Chainlink. So I know I'm very bullish on it. I'm excited. Don't say you weren't warned. I remember in 2018, I told my homies, hey man, Tesla's going much higher. Tesla was $200. It got down to 195. I was down on it. And it went from 200 down to 189, and then it exploded to 1,000. And then it went to 1,500. Then it went to 2,000, but from 2,000 they started stock splitting. They had a stock split. They stock split twice. And then it was Bitcoin. Hey, buy Bitcoin, buy Bitcoin. We're at what? We're at 7,000, 6,000, 8,000, 10,000. Buy Bitcoin. Boom, it collapses. We hit the pandemic. Now I'm underwater. Buy more Bitcoin at 3,900. I bought Bitcoin, and then Bitcoin goes to 79, right? Bought Ethereum. Ethereum goes up. So this is the better opportunity this is probably the best, especially with the bottom of the economic cycle. I'm not saying nothing could downturn, but if it does, it's going to be a big capitulation. Reverse repo facility still pumping liquidity. Shorting can be profitable now. Increase my account 30% last 10 days. Damn. Okay, so you were killing it then, Dima Yush. You were killing it with the shorts. Shout out to you, man. Shout out to you. If you can short, you have an edge in the market, right? A lot of people don't have an edge shorting. They don't know how to short, or they don't have exposure, or they think it's just easy, you just short. So you have an edge. You have an edge, and congratulations to you. I hope your shorting gets better. But you do know you better start covering if you're shorting S&P or Qs, and wait for that retest. If we make a lower high, you probably short again. But for now, that RSI is showing a bounce. Unless you're just shorting like some crappy stock, probably goes a lot lower. Markets really roll over. If I short, it's called the VWAP fade. Basically, the market's rolling over. It's bearish. I'm looking for a stock to gap down, to retrace up into VWAP, and then I'm going to short at VWAP because they sell off pretty strong when it comes down to it. Companies will sell off pretty strong on the downside. All right, so I think we covered about everything I wanted to look at. Again, like I said here, and I'll throw it up on the, this is going to be the picture for tomorrow. Let's see if I can get it up there. There we go. So this is the headline right here. Oops. The number one blockchain. All in. I'll disclose my position and everything so you can see it. Just so you know, and this will be a journey. So if you guys want to join me, I think I'm going to 10x. I'm going to 10x this. If you want to see a portfolio explode over the next 6-12 months, who knows? If it goes up too fast, I'm going to have to take some off, but I'll show you guys when I take some off. If it goes up way too fast, too soon, I'll sell some, and then I'll add it back if it makes sense. So that's basically it. We're going to talk about that tomorrow. The number one blockchain in the world. Anyways, that's all I have for you guys. Got to get to work. Gonna take the day off in the gym. Anyways, I hope you guys have a safe weekend. Stay blessed. Don't do nothing stupid. Stay optimistic. Why is Coinbase getting smashed? Why is Coinbase getting smashed? Because higher rate. I mean, there's a lot of reasons. Let me see coin really quick. You guys could throw the questions out at me. If there's no questions, I'm gonna get going here. So if you do have questions, throw them out. So I don't like start to try to end the stream and all of a sudden, boom, you start throwing them in. Coinbase getting smashed. I mean, everybody got smashed. The overall market is rolling over. 115 a month ago. Oh, well, the reason it jumped, I'll answer your question. It jumped because that's when BlackRock basically filed the Bitcoin ETF. There was a bunch of FOMO into the market. It moved up really quick because if Bitcoin goes higher, if there's a bid on Bitcoin, Coinbase is going much higher. They hold a lot of Bitcoin, just like MicroStrategy. And so far, the ETF is not passed yet. And the SEC came out and said, we're going to prolong it, but they're going to pass it. It's BlackRock. And Coinbase is a lot more volatile. I don't really like Coinbase as a proxy, to be honest. I know a lot of people do, but I don't. I think most of the coins are trash. So I think you're better off just buying a coin on Coinbase, not literally owning Coinbase. That's my view. A lot of people disagree. Uh, just own the Bitcoin. But yeah, Coinbase selling off. That's why once the crypto market, comes back on fire, then Coinbase will move higher. When rates get cut or rates go down or liquidity comes back, Coinbase is going higher. 100%. All right. Anyways, yeah. There's no more. What is your thoughts forecast on coin IRA money only? I don't have a forecast on coin. I really don't. It's literally Bitcoin. Just watch the price of Bitcoin. A Nasdaq and Bitcoin. I would say ARK invest. Watch ARK and watch Bitcoin. That's my forecast. If ARK goes higher, Coinbase catches a bid. If Bitcoin goes higher, coin goes higher, right? Because they're tied. It's tied to Bitcoin, first of all. That's the biggest holding. And then ARK holds a lot of Coinbase. So my forecast is if Coinbase can get above 118, 120, it's going to squeeze a lot of shorts. Oh, you can't buy crypto directly. Okay. What you could do is and this is not financial advice, what you could do is you could own some micro strategy, MSTR. They have a lot of Bitcoin. Okay, they have a lot of Bitcoin. That's a Michael Saylor's. Do your research on it though, and it has a big short squeeze potential too. There's a lot of shorts in there. So MicroStrategy you can own. You could own. You could do the. I don't really like that, but I mean, if you're gonna do it, you could do MicroStrategy. You got bit. Okay, and you know what? Coin is fine. You want to buy the weakness on coin. If that's what if you're looking at your IRA, that's not going to come for a while. Just buy the weakness. You want the weakness. You want it to be weak. That's your advantage. That's your edge. Is that you're purchasing an asset that everybody hates, that everybody's afraid of. I don't like Riot. I do not trust none of those none of those mining companies. I just don't trust them. They haven't been around long enough. You never know what they're really up to. I could be wrong. I've never done a super deep dive on them, but I know they're a lot riskier. I wouldn't mess with them. I'd stick with Coinbase. They have good management. You can trust the CEO. He's solid. So that's my thoughts on it. But if you're looking at the long run, yeah, you want to buy the weakness, right? If you bought Bitcoin when it broke out over 27,000, well, you're back to where you were. If you bought Bitcoin on the weakness when it dropped to 4K, you're up 4x. So you want weakness in the assets that are the future, that will become the future. That's what you want to do. You want to invest in the future when everybody doesn't believe it. That's your edge. Your edge is not everybody knows it. Your edge is nobody gets it. Nobody understands it. Everybody hates it. That's where your edge is at, right? That's where you get edge. Is that it? All right. We really don't got nobody on YouTube. I'm gonna end the YouTube stream. All right, YouTube. You guys stay blessed.